All right, everyone, welcome back for another episode of Carnivore Trades. Today is Friday, August 16th, 2024. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So don't listen to me, apparently, when it comes to looking for a pullback or a mean reversion. I've been kind of looking for that for last couple of days here. And we talked about this early in the week, said above, well, even late last week, above 53.25, we would squeeze hard. And we got through that. And then we got to the big resistance level of 5,400. We've just been squeezing ever since. So no mean reversion. Been kind of looking for that since Wednesday. When I say mean reversion, I just mean like a red day, like a single red day. Look at these candles here on the intraday. Look at the 5-minute. No lower lows. No lower lows to speak of ever since that rally off of jobless claims last week. So a truly incredible move. We now have officially, I know I talked about it yesterday on SPY, but we've officially done it on SPX. We hit the 786. And we're now backing into this trend line here, or backing off of that old trend line there. You can see essentially the same thing on the ES. Throw these old lines back up. I haven't had them on since before the sell, or really kind of like after the sell broke down, since they weren't relevant. But now we're right back into that, and you can see that's where we have stalled here today. But either way, just, I thought we would go to 550 today, and just, it's not like that was a big bear call. It was just like, hey, like there's GEX here. There's GEX at 470 on QQQ, and there's GEX at 5,500. So maybe after, I don't know, a 450 point rally, we would look for, a token, $3 decline on the SPY, but that has not happened. So bidders have been relentless here. You can see we gapped above that trend line there on the daily. We got that 550 level marked. That could still be support early next week. So we'll leave that on there. We'll leave the 55 there. But obviously an amazing rally. And I read, this is actually yesterday, that this was the largest rally since March 2022 it's like in time, right? Time and price. So that's from Mancini. That was as of yesterday. So we've gone up even more, and we're looking at 450 points essentially, 51.20 to 55.61, right? That's a big move, and we've done it with zero pullbacks. I'm just going to say this now. So this market here, just so that it's said, there's, I think, a little bit of tail risk here. And if you asked me yesterday, I would have said no, probably not. I envisioned us just kind of pulling back a little bit today, maybe a gap up and then a gap and crap back to 550, just kind of OPEX stuff, pin us at the whole round number. We ended up going to 55, 555 SPY and, 55.50 SPX. That's probably where we'll close here. By the end of the day is right around that 55.50 even number. But why is there tail risk? Well, the biggest rally since March 2022 in time and price, and you'll recall that was a big one, and it preceded a 1,000-point drop. Now that doesn't mean, like, who cares? That's just a comparison, right? But the characteristics are the same. It's a straight up move with no pullback. And unlike April, a lot of people are like, oh, this is kind of like the April bottom. Not really, because the April bottom, we had a 200-point base before a 300-point move and then a pullback. Right now, we just have squeezed up. And why am I saying that this is even a thing? The bears are getting dunked on, right? They should be getting dunked on probably up until like the last day or two. I said very, very clearly, like, do not, if you're short down here, take profits on the way down. Do yourself a favor. So between here, there's no excuse. There's no excuse to be not taking profits. Then I told you above 53.25, get out. So there, you have no forgiveness. You have no sympathy. But at this point, I mean, this is like unbelievable. Like I said, look at this move. No lower lows the whole way up. So why am I saying this? You don't want to get the bears out of the market completely. Why do you want that? Why do you not want that? Well, because there's nobody to stop the market if it goes down, right? There's no shorts to cover. Why would the market go down? Do we have anything happening this week? Oh, that's right, Jackson Hole. So we have the Fed next Friday, and we also have Vixpiration on Wednesday. What was the last Vixpiration? Oh, that's right, it was 7/17. So if you're bullish here, I don't think you want the market melting up like this. I think the bulls need to chill out, and they do need to pull back here. So if you can find a cheap hedge, I think that's probably a good idea at this level. You look at the VIX, it's completely erased the whole move from the 23rd on. So hedges are starting to get cheap again. And again, I'm not calling a crash here. I'm not saying to get bearish. I'm not even really bearish. I'm just saying I don't like the makeup of this rally. And if we're still just like relentlessly bidding up until that, I would think that there's a little bit of cause for concern. At the very least, you would expect a pullback into that if we're still just kind of meandering higher. That said, there's a window of risk here if the bulls can get through it. Again, bears, like I always say, they got to do damage. They got to do it quick. Small window of risk, but if they can do damage, they can make this interesting. But you got to start acting now in the next week or so. Otherwise, it's going to be too late. But very good rally here off the lows. Amazing. I thought 5,400 would be a little bit more of a battle. But what a squeeze. I told you guys about 53.25 we were going to go, but I didn't think it was going to go another 200 points that fast. But either way, amazing stuff. 786 retrace. Here, the cues again stalling out essentially at the 618. We hit it yesterday, kind of poked through it a little bit today, but again, it's keeping price in check. And you can see here on the NQ, beautiful trend line hit. Everybody got bearish here on this break, and we only went down for another 2 days before bouncing, retest, and then a big squeeze. Now we're into some resistance there. So we'll see. I mean, I just think bulls just need to chill out. That's all. 618 right there. I just think they need to chill out a little bit before. You don't want to be like melting up into Vixpiration right in front of Jackson Hole. So I think hedges are obviously cheap. If you can get one cheap, probably not a bad idea. You shouldn't be chasing them, even if we're like the bull scenario works out here. You shouldn't chase up here anyway. You should wait for a pullback or dip or consolidation. So I don't think anybody's not aware of that, but just some food for thought. Maybe we pull back to the trend line and that's it. But just some food for thought there. IWM here up 33 basis points. Still can't get above the 20-day, so kind of a sign of weakness there. Like the whole market's ripping higher and you can't even get back above the 20. I'm watching this by the end of the month though, because if this monthly candle holds up, you could get an inside hammer, which would be pretty bullish. But right now, a little soft. Dow back above 40,000. DIA has dividends, so it's a little bit different looking than DJI, but you get the idea. We're above 40,000. SMH flat today. So in a market that's really rallying, this is kind of flattish. Again, a lot of resistance here, right? If we go to, let's go to a 4-hour. So we are above that trend line, but you can see that pivot right there. Let's break it up to a 2-hour. There we go. Pivot, bounce, breakdown, back test, and that's where we're sitting. So, if we chew this supply out a little bit longer, we can go higher. And it's pausing there. But big level for the SMH. IGV continues to be strong, up 6 cents. Again, we'll watch this trend line here. A pullback here is interesting. So I think IGV, I've been talking about this a lot lately, but I do like the monthly. That squeeze is, these types of squeeze get me a little... I don't want the bears to get out too fast. Seeing a lot of bears getting dunked on, and again, rightfully so, to an extent. But now it's like, all right, like now I kind of sympathize. Like this is, the last 2 days specifically are just ridiculous. All right, Dow Transport's again holding up here. We pulled back off the highs yesterday, so we overshot my 15.7 target, but we're sitting right there right now. So we're going to close there by the end of the week. I'd like a close above that red bar to firm up, but not, no dice yet. All right, so let's flip over here to rates. So rates are interesting to me. By the way, here's something for bulls too. Here's a positive. Credit spreads are coming down still. So that's a positive. So that starts uptick early next week. It could be a little sign, but they are coming. They're still coming in. But this is fun. So I talked about this yesterday, and I said, look at the, I'm rooting for this to come down. It was down a little bit today, the 210 spread. It did come back up, but it's not really going up that much. And you can see the 3-month 10-year is down today. 5s, 30s, 10s, and 30s are up, but they've been uninverted. I'm just rooting for this to go back down just because I want to see the maximum amount of heads explode. But look at the 2-year here. It is red today, but you got a inside hammer, and it's hammering on 4.1. Next level is 4.2, and if it goes up to 4.4, people are going to lose it. Remember, the 2-year and the Fed funds rate are very correlated. The Fed goes off of this yield. A lot of people don't realize that, but this is what they look at. They don't care about all the other stuff. They tell you they do, but this is what it is. And if this starts going higher, it makes it harder for them to cut. 5-year, again, inside hammer. 10-year, inside hammer. Again, if you get through 4%, it's going to poke so many holes into so many narratives. This is why it's very hard to chase that recession trade, because everybody's in it all at the same time. And you might get a recession, but it might not be when you think, and it might be, everybody might get squeezed out, so nobody ends up making money on it. But if we get through 4%, you got 420. And then 30s, inside hammer a little bit weaker. Again, the long end of the yield curve's weaker. Figure that out. But 430, and then, at 435, 442. But yields holding up today. Michigan consumer came in hot. XHB down 81 cents. This is a little bit of a red flag. We are above 110 barely. Market's closing in 15 minutes, but for me, I want to see it above 111.32. That's the red bar high. I think I'm just going to get rid of this. That's the new level. So 111.32. If we can close above that, then I think it squeezes up. But it has been weak lately. Look at the rally versus what SPY has done. So not very strong. VNQ hasn't rallied much this week either, but it's already at 52-week highs, and it's consolidating on the weekly. So that's fine. That's still acting well. XLF almost into a short-term triple top here, up 26 cents. KRE up nicely, still backing off the 20-day, just like IWM. Same thing with KBE. And broker dealers just will never go down or stay down. Look at this, 1, 2, 3 sell and just right back up. So basically back to all-time highs already. Oil down after a contract roll. Still holding the green bar there. I'm still neutral on oil, but you do have a tightening pattern here. So again, looking at the weekly, it's tightening up. So it's getting ready to move. But right now, no bias on that outside of scalps and stuff like that intraday. XLE fractionally higher. It did gap down though, and it's back to flat. So there's some resistance here with this gap. If it consolidates, it can get through that. XOP, same kind of deal. 140, 142 is resistance. Got to consolidate or put in a higher low. And then the OIH, still disappointing. I'm disappointed in my OIH here. I don't have it, but I was really hoping it could get back above 305 this week, but it's not dead yet. The monthly pattern's still good, but it's definitely on the weaker side of energy. CCJ down 1.25%. That's basically the target. We talked about 42, or I think we talked about the gap and then 42. If it can base here, it could probably shoot up to 44, but right now, a little soft here. It did hit a very nice weekly level though, and it is getting defended. NM, same thing again. 42. I'm getting confused with this. That's why. So 42 to 43 is the gap there, and then NJ, that hit a very good weekly level. But I would have expected a better bounce though. But right now, back to about 20 and change. Just the level there. Nat gas backing off today, so a little disappointed in that. Again, I don't have it, but back below that breakout level, so not really good. It does have room for higher lows though. Seasonally, it also tends to bottom out in August to November anyway. August and then trades up into November. Hit my 230 target. It's pulling back. 618's at 204. So it has room for a higher low here. Dollar getting hit. Here's a little bit of a concern here because the dollar got a bid after consumer sentiment and it couldn't hold. So that's kind of a red flag when you can't bid on good news. Not a good pattern here at all on the dollar. So that's a point for the recession people who are obsessed with recession. And again, you had that weekly failure, and it's not looking good. Time's running out on the end of the month to get back above that green bar. So it's going to need a big rally in order to fix that. And gold, the beneficiary, all-time highs, new all-time high, new all-time closing high. 20 MA catching up to price. Absolutely no problems. Silver getting defended too. Good bid there. Higher high can get you up to 30 and then 31 or so. Like 30.75, we'll say. But yeah, good bid there this week. And again, I think metals are in a good position here. I think way too many people are short. Platinum down today, but inside hammer off the big move yesterday. Again, closing above 967 spot 8. Squeezes this up to 1,000. So I think platinum and palladium are interesting here. Again, fake breakdown on the daily and weekly. And possibly monthly. A little spike liquidity grab there. Always like that look. My copper is still doing well. Again, still riding a runner position on this. And looking for 425. So great falling wedge breakout. Again, heavily shorted. And it's getting a good bid. Bitcoin's hanging in there. Again, same thing. I would prefer it if we were above the moving averages doing this, but again, big level is still 63.5. One thing I want to just bring up now that I remember is a lot of people are asking about like, oh, Bitcoin was down yesterday, so does that mean liquidity is coming out? I think that there's an over correlation between Bitcoin and liquidity. Not to say there can't be one, but let me know in the comments. I'm just going to look at ETH specifically. I found this morning when I was messing around. So ETH had this big run up in 2023, up, down here, and then it had the big move, scooped up, lower high, down, bounce, sell off, and now it's kind of doing this. That remind you of something? It almost kind of reminds me of yields. All right, big run up into 2023 high, lower high, we scoop down, boom, and now we're doing this type of move. I don't know, is there a positive correlation between crypto and yields? You tell me in the comments. If nothing else, just a fun theory. So anyway, markets here, again, there's 55.50. That's where we're probably going to close. Don't make too much out of this action. It's OPEX pinning. Again, I think the markets, for bulls, I think they need to chill out here a little bit. There could be a little, there's tail risk, but again, bears got to act fast to do it. We got expiration, we got Jackson Hole, so there is an excuse for that to happen, but they got to do it here. But outside of that, great rally, great volatility here, and the market has been wild lately and awesome to trade. So anyways, guys, going to wrap it up here. You guys take care. Have a great weekend. Come find me on carnivoretrades.com, and I'll see you guys all next week.